Hello, traders. Gary Wagner here. Approximately 1:30 in Honolulu, 7:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is April the 1st, 2022, and this is the Daily Report for Gold and Silver, our weekend review. Traders, today the Labor Department released its latest jobs report indicating good job growth last month, just under 500,000. That was the forecast by economists. The actual number came in at 480,000. That, of course, arms the Federal Reserve with the necessary data, because they are data dependent, to be as aggressive as they believe they need to be when they convene in May and implement the next rate hike. It increases the probability that the rate hike will be 0.5%. Just raising interest rates will not resolve the complex problem of inflation that's coupled with military action in Europe. Gold futures closed down $25.20, currently fixed at $1928.50. That is basis the June contract. We did issue a trade alert. We'll talk about that trade in detail when we pull up our charts. Dollar itself had some strength, providing mild headwinds up 0.2% at 98.555, and silver lost about 0.5% and is currently fixed at $24.75.5. We did issue a trade alert this morning. We sent it out via SMS, text message, and email. I've just put it up on the screen, and our recommendations were to enter a long position in the June contract of gold futures. It was trading at $1,729, roughly 0.5 cent higher from current pricing, and place a stop at 1913. In terms of Forex, it was currently at 1925, placing a stop at 1908. We also talked about GLD, buying that at the open, 179.82, with a stop at 177.50. The primary reason we bought on a day when we saw the market come down in regards to a strong jobs report is strictly technical by nature. We had this extremely long rally, which took gold from 1777 to 2076, almost a $300 move. The correction that followed was precisely a 61.8% retracement. That is a deep retracement, but very acceptable, which means that we should re-enter a rally mode moving to higher ground. Fundamentally, I think that there is reasons that that is highly likely, even with today's sell-off of $25. We are looking at a daily candlestick chart with our entry price as well as our stop placement. Although current pricing indicated by this chart says that the market is currently at 1923, the actual price of gold is 1928.50. It is not accounting for the additional hour and a half of Globex trading following the close in New York. So in fact, our entry price is at the bottom of the range. We placed our stop at 1913 for a specific reason. We wanted to keep our stop very tight, and we wanted to place it not only under this recent low here that came in 2 days ago, but under the real body of the day that we saw gold trade to the low of $1,891. We believe that if this market will return into a rally mode, we should have good safety and witness a price ascent at the beginning of the week rather than a continuation of today's decline. The following is our exit strategies or targets that we believe are highly achievable. The first area that I believe could easily be achieved is the 38.2% Fibonacci retracement that occurs at $1,962. It also matches up quite eloquently to a series of tops that occurred right here, as well as this top right here. It's a significant area, could provide resistance, but I don't believe major resistance. I think major resistance will come in if we see the market break through the first point at approximately $2,000 to $2,005. If we're fortunate enough to see the market accelerate to higher pricing and the trade move in our anticipated direction, as always, we will trail stops behind it to look to lock in the maximum profit potential. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.